in each area of the world, there's a different strategy or a different level at which you become that. And all of a sudden, you can participate in deals that the average investor cannot participate in. Those type of deals are going to give you a discount to the marketplace, okay? And immediately, you're looking at a wholesale market, something that you're dealing in wholesale. Now, ultimately, you want to take all that experience, the business experience of climbing the cash flow ladder, the investing experience of climbing the retail and wholesale segments of the capital ladder. You climb those two levels, and now what you're going to do is take all of that knowledge, because remember, it's all about learning, not just earning. You get to that section. Now you're going to start developing products. See, at retail, you're buying other people's deals. At wholesale, you're buying wholesale deals. At this level of the game, where we create capital at the cash flow ladder, you are developing deals or creating deals to sell to other people. Now, a lot of people say to me, Brad, I want to go straight to that level. Look, you could go straight to that level, but the problem is you don't have the knowledge to go straight to that level. You may pull off one or two deals, but what's going to happen is you're going to get eaten alive by someone with the experience who's already done all of these other deals. So, stick with me on this step-by-step process. So you're going to learn how to sell business capital. That could be from licensing. It could be from franchising. It could be from area developing your business. It could be from taking your business into different regions and selling off regional segments of your business. It's a whole different ways of structuring that. Then we could look at the property capital, how to develop property, how to move from a retail buyer to a wholesale buyer to ultimately a developer who sells those properties for yourself. For me personally, I believe that if you keep stepping up these ladders, the number of zeros or the bigger the deals get, the easier life becomes. Ultimately, the share capital, an initial public offering, going out there into the marketplace, even offering options to employees of the company. These are the things that as you climb those two ladders, you're going to find very powerful for you. So we're going to come back and investigate this just a little more, but first I want to cover some of the ideas that maybe will be philosophies that really help me climb both of these ladders. So number one, let's take a look. Make investing my hobby. Now what do I mean by making investing my hobby? If your hobby was model aeroplanes, for goodness sake, what would you do? You would buy magazines about it. You would read newspapers. You'd log on to internet sites about it. You would join blog groups about it. You would join forum chats about it. You would read about it, study it, practice it, do it. Same's true for investing. How many magazines should you be subscribed to? How many newsletters should you be subscribed to? How much reading, how much knowledge, how much practice should you be doing? How many groups should you have joined where they chat about it? See, if you're a model aeroplane guy, you're part of the model aeroplane club. You know, so what investing clubs are you part of? How is that? Make it a hobby, make it something fun, and do it. Because the reality is when investing is your hobby, you don't need model airplanes anymore. You actually own one. So don't worry about the models. Next one, and probably just as important, if not more. Let's take a look. Buy equity, don't loan for interest. What's that mean? Real simple. Majority of people are not investing. What they're doing is loaning their money to someone else for an interest payment. That interest payment could be a certificate of deposit where you might get 5% up to 7% in some parts of the world right now. You're getting an interest payment. A lot of mutual funds, people look at, well, what was my percentage return for the year? I want you to buy equity. I want you to buy a physical, solid asset, be it a share, be it a property. Buy an equity position, and don't loan your money out. Because the equity positions, it's kind of like I watch a lot of things around the property market, and there's a lot of people talking about wraps of property and all this stuff. Just buy the damn property. It's a heck of a lot simpler and a heck of a lot easier. And ultimately, investing is about capital growth. Investing's not about cash flow. It's about capital growth. So where are you going to get the best capital growth? Let's take a look at the next one. Something most people really miss. Pay myself first. You should have money go into your investments first and foremost. Whether you're a business owner, whether you work for someone else, no matter how it is, your money should be going to you first and foremost every single week, month, whatever. Take the money out. See, why is it the majority of governments on the planet take your taxes before they give you your paycheck? Simple. They don't trust you to have any left if they left it with you. So how do you trust yourself? Pay that money into an account where you can't touch it straight away. Get it out there first. Then ultimately your capital will grow. Next one, and this is probably a bit of contentious one. When others zig, I zag. If everyone's buying in the property market and the market's booming like this, is that a good time to buy? No, that's the worst time to be buying. You're paying too much, you can't negotiate price, the market's overheated, you're paying higher cost structures, all this stuff. Now, if one area of the country is booming in property, is there another area that's not booming that will boom at some point in time? Yeah. Read my book, The Real Estate Coach, about how that works. But ultimately, if someone's going one way, if they're all buying, I'm probably selling. If they're all selling, I'm probably buying. You know, if you cannot find a buyer on the planet to save yourself, do you think that's a good time to be a buyer? They're going to hunt you down, they're going to love you, they're going to give you discounts, they're going to take you to dinners. Be a buyer when everyone's a seller, and be a seller when everyone's a buyer. Very simple. When they zig, I zag. Next one. Know myself. Create my own rules. What's the difference between a gambler and an investor? It's real simple. Gambler just gambles. They go on gut feel. They go on. An investor has a set of rules. A set of rules. And I know people say rules are made to be broken. No. In investing, you set your rules, you follow your rules. It's simple as that. People say to me, you know, what should I invest in, Brad? Well, what should I be investing in? I say, well, you should be investing in enough books or seminars so you don't ask me such a stupid question. The reality is, until you can write yourself a set of rules, you don't have enough knowledge to be investing. So gain the knowledge to be able to invest further. Next one. One of my pet hates. Ask investors, not salespeople. How many people do you know that go and see a salesperson who gets paid a commission to tell them what to invest in? What a dumb thing to do. You know, you cannot go and ask someone else who gets paid a commission. They are just so biased. You've got to look to investors who are out there in the marketplace. That's why I say join investing clubs. Go meet investors. Go read the books of other investors. Do the things that you need to do to learn from the people who are already investing. You know, I love looking at the mutual funds or the hedge funds and finding out which people have their own money in it. If they don't have, if the guy running it or the gal running it doesn't have any money in the fund, do not put money in that fund. If they're not risking their own money on the work that they do, why should you risk your money on the work that they're doing?